All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 19th, 2022. If you stick around to the end, we got some sniper trades of the day extras to look at from Dan Blum's turbo swing trading posts from Saturday. In silver, Boeing, and Tesla all turned out pretty well, so we're going to get to those. This is a comparison of SPY in blue and an ETF called Wiz, which is a state of the art artificial intelligence bull runner, bear rider, AI driven model for an ETF, and it's supposed to, you know, be long and strong in bull markets and then protect you and actually earn money in bear markets. And so during the run up, this is a 2 year look at it. And so during that bullish run to the all time high, it underperformed. Instead of gaining 28%, it gained about 8 or 10. And then during this bearish market that we've had, when the market went from is down to still positive at 2.75. This is down 12%. So they still got some work to do. Now the thing is, it's a really well constructed theoretical model. They said all the right things. But their monthly adjustment model, I don't think, is well timed or well tuned to current market conditions. It makes much more sense to me to have conditions based adaptive AI than calendar based adjustments. That just doesn't seem to me to be the modern sensible treatment. So here's a sniper trade of the day today. And we're going to start with a symbol that CLF, one of our usual suspects, 3 minutes. Closed here, opened here, sold off through the OR3 there. We established the minimum manageable risk box, and we're short. And it makes an orderly exit, as you would expect. So that's about 1R. It's orderly, so we give a stop and reverse. Standard risk box. We would reverse underneath the belly of the RL10. So we don't even have to wait for a full MMRB. We would actually execute at about 0.7, right? It fails almost immediately for half an hour. I stop and reverse on that one because that looks like it caught it to darn near a collapsing dragon. So I stop and reverse and go short, and I was slow on the uptick. Like this one caught me by surprise. I was not prepared. So I waited for the RL10 to hit the VWAP, and I got a slightly better exit. But that one's also, that's about a minus 0.2. This was about a minus 0.5. This was a plus 0.7-ish. So we're about scratch for the day. Stop and reverse in the usual way. Another 0.5 loss. So now we're about 0.5 in the hole. That's a stop and reverse once again. This is where I considered making a second entry on that R10 wiggle, which failed. I looked at adding a second position here because we were a little over 1 hour in hand. I thought I would wait a little longer though and just wait for the 2-hour battle drill. The rest of the market was starting to fail at this time. That's about 2-hour in hand and momentum. Second position. It rejects the VWAP twice, 3 times. Now, if you get out at this one, I understand that. If you get out here to cover, then you have to get back in right there. I was waiting for the RL10. It never broke. So we just kept going with, added the third position, and took the SSC exit. So counting them up. Off the first position, we got 1, 2, 3, 4, 5, 6. Off the second position, we got 1, 2, 3 and a half. And off the third position, we got basically 2. So that's about 11. That's about 11.5, and then minus 0.5 off the first pile. 1 for the kitty, call it 10 for the day. So Cliff, once it got going, behaved the way that Cliff behaves. That's why we trade it. Questions? Check or hold? $30-minute chart on the SPY. So we're looking back 5 days, 10 days, 30 days. We're coming in pretty close to the 30-day low now. We pushed down to a new 10-day low and 5-day low. That 5-day range is enormous compared to the 30-day range, because that'll get you every time. So today was more of a collapsing dragon, and if it breaks lower than 378 tomorrow, that's an instant short. If this support level at 370 breaks, look out below. By the same token, this support level here has featured a strong move before. It's also featured a couple strong sells. So this one is really a crapshoot. Yeah, Dan, just go into Campfire and search Frog Champions. And it's also in the glossary. Here's the daily charts again: 5-day, 10-day, 30-day look back. This was another vote downward, and again, if this collapses, look out below. And on the 150-day look back, you can see that the the midpoint up in here, we've clearly violated that. We're now down in about the bottom third of that 150-day range. We went from the top third through the midpoint all the way down to the bottom third. Now we're getting ready to collapse. But again, this has had a strong move in the past, but that was after a nice move like this. So the previous move on this one is here. So again, it's a compound critical state. Strong move in either direction. Just remember, we're in bearish normal conditions. That's pretty important. right, let's take a look at the markets today. Sectors, I should say. So the S&P, our baseline, was down 0.85. Diamonds, 0.48. Emerging markets were the best at 0.08, and that was the boundary between winners and losers. Tesla only down a quarter today. The Russell off 1.3, the Q's off 1.6, Treasuries off 1.68. So not much to choose from among the indexes. Looking at the things that outperformed the S&P, blended commodities, staples, commercial real estate lost a little bit less, 0.6 and 0.8. Agriculture, 0.5. Aussie dollar, 0.2. The three winning positions today, Mexico, oil, and Brazil, up 2.1, 1.8, and 0.9 respectively. Pretty slim pickings. But, you know, to be fair, Brazil and Mexico have sold off enough that there's definitely room for them to be the recovery, the alternate to the U.S. and the globals. All right, looking at the underperformers. S&P was off 0.85. So you got finance and lumber, 0.57. Commercial or residential real estate, I should say, 1.1. Lithium, tech, Bitcoin, and wheat and precious metals, 1.69. Consumer discretionary, 1.9. Materials, 1.9. Then the big cluster here of the FANGs, biotech, uranium, oil exploration, VIX, lumber, the other lumber, ARC Innovation, and Squarespace down to 3.3. ARC Genomics, 4.4. Clean energy, Ethereum, and marijuana, 6%, 7%, and 18%. You may recall our discussions of marijuana over this weekend about why it was particularly vulnerable, and hopefully you got a piece of that one. That one dropped like a stone. Take a quick look at some of Dan's. Here, this was Boeing. These were the three turbo swings that Dan had. So this was Boeing. OR3 opens, gets a couple R on the initial burst right out the gate. The stop and reverse at the PSAR flip, sloppy, capturing some of those gains, maybe an R. The stop and reverse gets you another R. COTA 2 gets you an R. The stop and reverse gets you an R. So Boeing was pretty lively today in both directions and offered lots of opportunities to make some bank. Silver, the OR3 and breakdown sells off, gets 2R. The stop and reverse scratches, although with a little active management you could have done a little better. The stop and reverse gets paid large. If you're using the 2R battle drill, that one's huge. Also, if you just wait for the collapsing dragon, even if you're not using a strict 2R battle drill, this collapse here, notice how it stalls coming into that, and then when it breaks large. That's why you want to know where that statistical limit is. That one got paid huge. Stop and reverse. Gets paid pretty nice. Again, another stop and reverse. Also gets paid well. So silver, a pretty orderly set of trades intraday for the turbo as well as the swing. You can make enough money on those intraday plays that you can end up keeping a piece of it overnight with the risk funded by markets money. Let's see, we already saw Boeing. Sorry. Tesla. OR3 scratches quick. The PSAR flip gets paid pretty large. There were opportunities for 2R battle drills and collapsing dragons in there, as you can see. But even if you're just playing one position, that one paid off probably 4R. Now an SSC. Talk about your symmetrical play. That's 4 in one direction and then 4 the other way. And then a stop and reverse. Gets another 2. So that's 10R in Tesla on one position. The most important symbol in the stack. Let's take a look at the traders today, see what they got. All right, here's Tim on Tesla during his time frames and brings home an R in an orderly way. This holding support here, maybe there's a 1, 2, 3 and a crossing of the VWAP that you like. That's still reasonable, like new high of the day. I like getting paid. I like that when this doesn't break, you're ready to get long. And I like the quick cut and then waiting for the PSAR to get paid. Confirmation of rejection gets paid in a big way and then scratches out. That's a good performance on Tesla for that price pattern action right there. It's pretty good work. This is, I think this is Satya on STLD. This is the Steel Dynamics, a new addition to our metals. Here's his OR3, standard risk box. RL10 peaks, crosses the baby dragon. He captures 1.1 at the edge. Notice he gets that on the proper side of the dragon. He just gets paid 1.1 and is happy. When it comes through the dragon and the PSAR flips, he just puts his short on, gets paid 0.5, stays out of the chop, notices the PSAR flip, notices the collapsing dragon from here. So even if you don't get this one, and if you get that one, then a consolidation and then another collapse, there's 3 pretty good entries based on signals right there. And then a couple micro scratches. Brings home 1.5 for the day. Good work. There's my brother on Merck. We noticed the strength in Merck and its intraday volatility. And he gets a PSAR flip entry in the sniper right here. Here's his 2R battle drill. It never really gets there. He covers at the edge of the dragon for 1.4R in an hour. Right by the numbers. Bill also got CLF. So he gets the PSAR flip, short. It never gets to his 2R battle drill, but recovers, so he captures zero point 0.8. Then it rolls over, leaves the dragon. He gets short, adds a position at plus 2R, adds a third position at plus 2R, adds a fourth position at another plus 2R, exits on a 1, 2, 3, and brings home 14.4 on that set. Pretty nice work. As he's costing that out, that's he made $1,580 for 6.5 hours of work. That comes in at $243 an hour. You can run a business on that. Wojcik is energetic now that he's back. Glad to have him. Does the OR3 scratch on Devon? He doesn't take the stop and reverse. Stops trading it, shifts all the way over to Tesla. Gets a couple of those quick scratches inside here, but when the big collapsing dragon hits, he nails that one for 2.7, giving back only a fraction. Hits the stop and reverse the same place we did for 3.3. Stop trading here, brings home 5 on Tesla, just like downtown. Welcome back, boss. All right, we'll go to the daily report, finding, let's see, dashboard 1. We're still in bearish normal. The risk Z is warning us about potential downside sharp moves. There are some overreactions here in the Dow, Euro-Asia, European 350. Also the channeling in EFA and IEV. That's they're above the 200-day moving average briefly, and have pulled back far enough that you can buy on a dip. So we'll be looking for strength in those tomorrow. Because we're in a bearish normal, I want to actually see positive moves before I commit, and I'm going to start with an intraday position. Because of the steepness of that 5-day sell-off, you're seeing a ton of auto framers. So this really is a buyer's market. A ton of collapsing symbols at 5DDs. And remember, maybe the best trade of all is the 5DD failure. And that's where you have something that signals on a 5DD. So it's down 1, 2, 3, 4, 5 days, 5 lower closes. And then we frame that, and then we buy it on the long side with a daily risk box here, and this gives you the reward to risk if it goes back up to the 10-day high. So you can see some pretty extraordinary reward to risk ratios. But because this is bearish normal, if that thing violates, that is an auto short, because whatever is making this thing fail 5 days in a row, there's more of it coming. So 5DD failure in a bear market is one of my all-time favorite plays for those of you in the swing trade land out there and the hybrid trading. And as close as we are to the 200-day moving average, all of these channelings are also candidates for a channeling failure, and you can be short. So I would be taking a look, strictly. I would start with the 5DDs that have the best auto framer, and I would be ready on those sort of. But I would also say, look, Nike was bad today, and it's a 5DD. So even though it doesn't have a favorable number, I'd be ready to get short Nike and Disney in a big way. Meanwhile, Tesla continues to just get smoked, as does Disney. As does Apple. Apple is really weak these days. It was off 1.5% today. In the ETFs, we're seeing almost the same thing with tons of NDX failures, lots of auto framers, clean energy a clear loser, XLY consumer discretionary also a clear loser. That's because of weakness in Home Depot and in Tesla. The auto framer and the squeezes are self-explanatory. Lots of Godzillas emerging now in the S&P 500. I especially like those Godzillas that are already actively expanding. So MTCH, KMX, and Disney all fit that criteria. None in the tactical symbol set. I like that Apple is a Godzilla. Even though it wasn't volatile today, I'm still ready to pile that thing on the downside. Tesla. A lot of choices. It's a buyer and seller's market out there. Yeah, you can tell just how bad it and widespread the weakness is here in the NDXs. Very few symbols showing anything like strength. Boeing, Caterpillar, Merck. Maybe a little U.S. Steel and Chevron. Latin America, Brazil, and Mexico. A little quiet stealth move going on. Mexico looks especially good. And that's what we got for today. We'll get this published and posted. If you hang on a second, Dan, I will send you that. I'll post the list of fraud candidates in here unless you have already found it. But that's everything we got for today.